All right, let's get right into it. Welcome to this brand new explainer. Today, we're taking a hard analytical look at the Airbus SE investment thesis as of August 22, 2026. Whether you're actively tracking global industrials or you're just fascinated by the massive business of aviation, we are going to break down exactly what makes this European aerospace giant tick and try to figure out if it deserves a spot on your radar. I want to kick things off with an absolutely staggering number, 8,700. That is Airbus's current record-breaking aircraft backlog. When we talk about sheer scale and gravity in the industrial world, this is exactly what it looks like. That number represents roughly 12 full years of guaranteed aircraft production at their current rates. Think about that for a second. When Airbus delivers a plane today, that order was likely placed 5 to 10 years ago. It gives us a level of forward revenue visibility that almost no other industry on the planet can even dream of matching. So, here's our game plan for today. We're going to cover 1. Airbus's footprint as an aerospace giant. 2. The hard financials by the numbers. 3. The bull case. 4. The risks and challenges. And 5. We'll wrap it all up with the final verdict. Let's start with Section 1. Airbus, the aerospace giant. Operating out of its headquarters in Toulouse, France, this behemoth really has 3 main engines driving it. Commercial aircraft is the undisputed heavyweight here, generating roughly 70% of their overall revenues. I mean, this is the division pumping out the iconic A320 family and those massive wide-body A350s. The rest of the revenue is basically split right down the middle. 15% comes from their spot as the world's largest civil and military helicopter manufacturer, and the other 15% is from defense and space, which handles military aircraft in Europe's Ariane rocket program. Now, you really can't talk about Airbus without talking about one specific word, duopoly. It is the absolute foundational advantage of this company. The market for large commercial aircraft, so planes with over 100 seats, is almost entirely controlled by just 2 players, Airbus and Boeing. It's like a giant, heavily fortified castle. Neither company can be easily displaced. So for you as an investor, this duopoly structure means 2 massive things. You get incredible pricing power, and you've got practically insurmountable barriers to entry for anyone else trying to join the party. Moving right along to Section 2, financials by the numbers. Let's see how that duopoly actually translates into cold, hard cash. Looking at the first half of 2026, consolidated revenues hit a highly impressive 33.2 billion euros. That's a 12% jump compared to the exact same period last year. Their adjusted EBIT, which, by the way, is their preferred metric for measuring underlying profitability, came in at 2.7 billion euros. On the output side, they delivered 145 commercial aircraft in just the first quarter alone, keeping them perfectly on pace for their confirmed, very ambitious target of 870 commercial deliveries for the full 2026 year. But it's where they're heading that's really wild. Management anticipates massive growth, setting a midterm EBIT target of 12 to 13 billion euros by 2029. If you contrast that 12.5 billion euro midpoint with the record 7.1 billion euro EBIT they just achieved in 2025, you could see they're projecting a near doubling of underlying profitability in just 4 years. This is mostly being driven by serious margin expansion as the A335 program matures and they scale up production rates. All right, Section 3, the bull case. Back in late June 2026, we saw a massive catalyst for Airbus. They secured a 3 billion euro loan facility from the European Investment Bank. Now, this isn't just your standard corporate loan. It's actually the largest corporate financing package the EIB has ever approved. Why does this matter so much for the bull case? 2 reasons. First, this money is purely earmarked for cutting-edge R&D in aviation and defense, and they got it without diluting existing shareholders one bit. Second, the EIB president explicitly framed this as supporting Europe's strategic autonomy. That is a hugely powerful endorsement of Airbus's political backing at the very highest institutional levels. Then you've got this incredibly shareholder-friendly move, a 5 billion euro share buyback program mapped out over the next 3 years. That represents roughly 6% of their current market cap. When a company buys back its own stock at this kind of scale, management is essentially putting their money where their mouth is. It's the ultimate signal that they have deep, unwavering confidence in their future cash flows, and it gives a direct boost to earnings per share. And Wall Street? Well, they are totally on board with this bullish narrative. Out of 24 analysts recently polled, the consensus is a solid buy, with an average 12-month price target of 229.74 euros, which suggests about a 7.5% upside right off the bat. But look at the heavyweights. Commerzbank is screaming strong buy at €240, matching UBS. RB Capital is eyeing 250, and Barclays is sitting all the way up at a very optimistic €260 target. Now, if you take away one single thing about their financial health, let it be this: a €9.8 billion net cash position reported at the end of H1 2026. That isn't just money sitting in a bank account gathering dust. It's operational armor. It gives Airbus exceptional flexibility to invest in innovation, and more importantly, it acts as a rock-solid buffer against any sudden macroeconomic shocks. And all of this financial strength is being propelled by some undeniable long-term macro trends. The International Air Transport Association projects that the global passenger count is literally going to double by 2045. Put that surging demand, especially coming out of emerging markets in Asia-Pacific and the Middle East, together with an aging global fleet that desperately needs fuel-efficient replacements, and you have a perfect storm. The A320neo and A350 families are just exceptionally well-positioned to ride these exact market tailwinds. Time to flip the coin. Section 4, Risks and Challenges. The biggest elephant in the room right now is execution risk, tied directly to global supply chain bottlenecks. You see, aerospace manufacturing is completely unforgiving. To actually hit those ambitious 2029 targets and double their EBIT, Airbus has to ramp up production of the A320 and A350 significantly. But here's the catch. They can only build planes as fast as their slowest supplier can deliver engines, fuselages, and thousands of other highly specialized parts. A single hiccup in this massive global web can severely delay deliveries and eat right into their profitability. There's also a fascinating currency dynamic at play here. Because the global standard for pricing an aircraft is the US dollar, Airbus pulls in a massive chunk of its revenue in USD. But they report their earnings and pay a lot of their costs in euros. So a strong euro against the dollar actively hurts their margins, while a weak euro acts as a huge tailwind for profitability. It's a structural currency quirk that creates a level of earnings volatility that investors absolutely have to monitor. We also can't ignore the unique geopolitics involved. Right now, Airbus is 25% owned by the states of Germany, France, and Spain combined. Naturally, that creates some very distinct governance realities. Toss in the ongoing trade tensions between the US and Europe, along with strict defense export controls, and you're dealing with a layer of political sensitivity that purely private companies just don't have to navigate. Finally, let's talk valuation. 28.5. That is Airbus's estimated 2026 price-to-earnings ratio. While all that growth we talked about is expected to bring this multiple down over time, the reality today is that this stock is not cheap by traditional European industrial metrics. You are absolutely paying a premium for that duopoly advantage. Which brings us to Section 5, the final verdicts. Let's pull all of this together. The narrative is pretty clear. Airbus is a profoundly high-quality company. They offer a durable, virtually unassailable competitive advantage thanks to that duopoly, plus a massive €9.8 billion cash fortress. They've got a heavily backed growth trajectory aiming for that €12 to €13 billion EBIT by 2029, and they're rewarding investors right now with a €5 billion buyback. But jumping into this global aviation story requires some serious patience. You have to be willing to stomach the short-term noise of supply chain bottlenecks and accept a somewhat premium valuation today. So I'll leave you with this to ponder. Looking at those 8,700 backordered aircraft, you really have to ask yourself, is the long-term, structural, global demand for flight strong enough to outweigh the immediate, turbulent realities of the manufacturing supply chain? The data lays out the roadmap, but how you weigh that timeline is totally up to you. Thanks so much for hanging out and unpacking these numbers with me today, and I will catch you on the next explainer.